Okay, welcome everyone on our weekly live call when we go from the Q&A and also like live trading sessions. So today I wanted to talk about a few things. And first of all, which I promised quite a while ago, was how to choose markets to trade. How to do it, how to connect them, and how not to do it. That's also an important question. So my first question to you guys would be, what markets do you trade on? Which ones are your favorite markets, if you have anything like this, or do you do like multiple markets? You can either unmute yourself and tell me, put it in the chat. It's up to you. I just want to have a general sort of grasp of what's your favorite?
For me, for the moment, I just trade with the exchange one, the Forex one. I don't trade indices and the others. Just I focus on one, this
Mm-hmm.
Forex one, and I'm trying to master this one very well. Then I will see later for the others.
Okay, and what's that Forex market you're trading?
So I took some position on Australian dollar and then US dollar, something like that, I think.
Okay, so Australian dollar to US dollar. Okay, anything else?
Yes, wait, I check what I have got.
Sure, you're sure. Take your time. Let me know. I see Robert. See, he said now GBP JPY. Okay. Anything else, Robert, or just one market? Oh, Dow Jones. Okay, fair enough. That's cool. Grzegorz said
Okay,
gold.
US, US, this US and Japanese yen.
US dollar and Japanese yen, right?
Yes, I made 1.37 profit, something like that.
Okay, so US dollar and Japanese yen, and also you said Australian dollar to
Yeah, yeah,
US.
no, euro and the New Zealand dollar, something like
Okay, euro and New Zealand dollar.
that, and the USD Canadian dollar.
USD CAD. Okay, okay,
This is different.
that's good. That's good. Okay, so I know of that. Thank you. Grzegorz said gold. Anything else other than gold, or you're just sticking to one market?
I'm sticking to one market for the moment.
Okay, so Thier knows with one. How about Grzegorz? Przemek, you can also. I remember Przemek, you said once that you're also like interested in gold, if I remember correctly. But you can always write it down if there is anything you want to share with me, either on chat, multiple in general. Okay, that's good to know. That's good to know because we'll talk about that now, actually. Right. So uh, a lot of people have this misconception about the markets. For example, someone can come to you and say, well, like the markets I trade is, for example, GBP USD and also Euro USD and also gold. And they think they trade different markets, but that's not true. They only think they trade different markets. The markets are pretty much the same. Why? Yeah, exactly, Grzegorz. Like Grzegorz said, it all comes to US dollar, right? So I'll show you a simple trick or sort of thing you can also look at as a proof, really, to prove my point. I'll share the screen, but before that, we need to come to a realization that in reality there is only few currencies that are like the most important, right? So first of all, I'll share my screen to make our lives easier. Okay, you should see my screen by now. Okay, so what are, let's say, the most important currencies out there on the market? So definitely US dollar, right? So like it doesn't matter if you think it's inflated or if it's not related to gold anymore. US dollar is definitely still one of the most important currencies. For some reason, it doesn't want to show on screen. I just wrote it down, but let me first know if you can see my screen. That's also very important. I hope you can.
Yes.
Okay, perfect. Oh, someone just wrote something. Okay, perfect. Let's try it again because it doesn't want to write. And okay. Perfect. Okay. So US dollar, right? Then also for one of the, well, quite a strong one as well, is also Great British Pound, right? As we know, this is also quite an important currency. What else? For the European zone, it will be euro, right? That's important for us. And also in the markets, if you have a look, there's also JPY, which is quite an important currency because you're going to find a lot of pairs. And that is pretty much it when it comes to like the biggest ones, right? Obviously, there's plenty more pairs you can find, but those are the ones that are the most important. Now, if we were to do it like baskets, so we can have different pairs and you can sort of put them into groups. So that's what it would look like. Let's do like baskets. Let's do like, let's say 9 of them. Obviously, there will be more, and there can be more, but that is pretty much all we need for now. I'll put 9 and we will start filling it out. Obviously, this is a good homework for you as well, for later to actually group it for yourself so you're aware of what's happening and if you're making any mistakes or not. So first pair would be US dollar. This would be like the second pair out of the second sort of currency out of the pair. Like, so to make it simpler, so here, for example, we would put euro to US dollar, right? Or GBP to US dollar, or Australian dollar to US dollar, and so on and so forth, right? So like pairs like this. Then what else can we do here? Let's put text here. For example, we can put JPY, right? So when you put JPY, what pairs can you have? Well, the first that comes to my head will be, for example, Euro JPY, right? Or USD JPY, or GBP JPY, and so on and so forth. So you have this. What else can you have? Well, you can have something more local, let's say. You can have Swiss franc, because you obviously you will find pairs to Swiss franc as well. Another group would be indices, right? So like Dow Jones, DAX. And so here are like different currencies, obviously, because Dow Jones and DAX will be in different currencies, but this is another group that we can focus on. The next one we can do commodities, right? So like commodities, for example, commodities would be anything like gold, silver, oil, and so on. And what else? We can put, for example, if someone is patriot, like some people are from Poland, for example, so we can put like PLN, which will be an exotic one. But like I said, pairs. On the Forex, when we go to the Forex section on MT5, I think there's like around 40 pairs. This one obviously is an example. It's not a big pair. We'll talk about it in a second. What else can we have? We can have crypto, right? Crypto is another branch, let's say, or another group that people focus on. There are some pairs like Thierno said earlier, New Zealand dollar, right? There is another one as well. We can also have, oh, I know which one. Forgot about it. Canadian dollar, right? So obviously there would be more. A good homework for you would be to like take a screenshot of this, for example, and then later alone do like, for example, Dow Jones, right? Or like put like Dow Jones, DAX, and so on, like S&P 500. Here you can do like gold, silver, and so on and so forth. So you're just aware of what is happening on the market and how you can group the markets. Now, when it comes to US dollar, it's quite a simple thing you can do in order to realize that they are all related to each other. So if you go to this website called TradingView, like tradingview.com, for example, you put in the search section, you put the one that is first here. So US dollar index. You can call it USDX and it will be fine. So like, let's put USDX. It's right here, but let's say open the first one. And when you look at US dollar index, you will see something like this once it's going to load up. Okay, so we're on 4-hour time frame, right? I hope it's seen pretty well. I'll just make it. Okay. So that should be visible. So I want to, this is quite a nice move that we'll find on MT5 as well. So what was the date? 14th, 15th of July, 23, right? So that's when the US dollar started getting stronger, right? And it was a nice move up to the beginning of October. Now let's go to MT5. So once we go to MT5, we go on the same time frame. So I'm on GBP USD right now, and we zoom out. Okay, so now you see, I'm gonna go on crosshair. You see this place here, right? Right here. What's the date? I'm gonna move it up. The date of this was 13th, 14th of July. So you see the correlation, it's quite easy. If the dollar goes stronger, like US dollar index goes up, everything related to dollar goes down. And this is basically, like you said, it's the same date, right? On the bottom, you can see it, this black 2023-07-14, which is 14th of July, or like 13th. This is where it started, the same time frame, and it just goes down. Obviously, there will be slightly like the little difference when you come to like Euro USD. We'll check it in a second. But then you can see here, again, here was like 4th, 3rd of October, even maybe 2nd. So like those 3 days. And then US dollar, GBP USD started going up. So I wonder what happened on US dollar index. Can you see? Like 3rd of October right here, the US dollar started going down. So if you know the dynamics and you can analyze the US dollar index, you pretty much have it done on these ones. But okay, this is just GBP USD. Let's go to like Euro USD, for example. So Euro USD, let's go on H4 and then go back up. Okay, again, another peak was here. Let's go on the crosshair. I need to move this window crosshair. Again, this started actually like here. Oh, here is the start. So the 14th, there was a bit slide up. But again, the top was pretty much here. So like I said, they were slightly different. But again, the meaning is the same because it started going down, like just downhill. And then it sort of started waking up on the 3rd of October. It was this move up, as you can see on US dollar index. Like Audi USD will be slightly different, I think, but we can actually try and see. They should all be the same, more or less. So like H4. Where is the US dollar index? Let's take crosshair, because it involves Australian dollar, which is another, like, let's say dollar, then it's slightly different because you can see on the, where's the 14th of June, July, around here, right? So again, there was a top, a local top, and then it started going up. I mean, started going down. And here we can see the local bottom, and that was 4th and 3rd of October. So you get my point, right? Like it's quite straightforward, I would say. So that is one sort of tip or trick that I can always hack. So with the advanced knowledge, Damien always starts the market update with analyzing US dollar index because that sort of gives us direction for all the currency pairs related to US dollar. Okay, so we talked about the sort of homework you can do for yourself. We talked about US dollar index. Now, how to choose the markets. So I should open a new one, actually. I think it will be better. I hope everyone took a screenshot of this. Or let's try. Let's go to Google Paint online and open another one just in case if someone's gonna need it, because what I'm gonna say now is how to start with choosing the markets. So the first market you're gonna choose, it doesn't really matter because it's the first market. So regardless of what you choose, it should be okay. We'll talk about the only things you shouldn't do at the end. But let's say, for the sake of this example, that you will do it like I do. So like my first market is GBP USD, right? So we have this, and this is my first market. So it doesn't really matter because that's number one, and that's pretty much it. Now, the fun part starts with the second market, because sometimes you, like, if nothing is happening and you still want to practice and do something, you can choose a second market. In this case, if my first market is GBP USD, can I go with Euro USD? I can't see if you're writing anything because I can't see the chat. Let's see if I'll be able to do it. So you can either let me know, because I can't see your chat, unfortunately, for now.
No one is writing, actually.
Okay, so can we do Euro USD for a second market or not?
Why not?
We can or we can't?
I believe we can. Why not?
Oh, well, I can tell you. So no, according to the rules, we shouldn't do it just because you're playing the same thing twice, basically. So if you're going to be wrong, you're going to be wrong twice. Sure, if you're going to be right, you're going to be right twice, but this is sort of meaningless because you should be able to switch to completely different environment when you're choosing the second market. So none of the pairs should be the same, just because then even statistically, when you look at the trial that we'll talk about later, you're sort of doing yourself disservice. So if you chose GBP and USD for your first market, then you shouldn't, I can edit it now, then you shouldn't do anything related to GBP or USD for your second market. So for example, you cannot do GBP JPY because it has GBP in it. So you're sort of setting yourself for a trap here, so to speak. So that's why we say that we should avoid repeating the markets. If you chose GBP USD for your first market, choose something else. In my case, for example, I go with Euro GPY, right? Because then I don't repeat any of the currencies from my first pair. And I'm sure that it's completely different when it comes to the analysis. I'm not going to set myself twice for the same mistake. So like even if I go to MT5 and we look at like GBP USD on H4, I zoomed it out completely. I don't know, let's go to Euro JPY, for example, on H4. Like you can see that it's not the same, right? It's completely different scenarios, completely different things are happening because we're talking about completely different pairs. That's why it's safer to, if you're going to choose the second market, then do it like this, you know, so avoid the repeating because that will cost you mistakes twice, basically. But okay, let's say now that you want to add a third market. So should you then, for example, can I put DAX as my third market? DAX is a German index, right? So like it should be in what currency?
Euro.
Euro, right? That's in euro. Exactly. So if I have GBP USD, then I have Euro JPY. Can I have something that is in Euro for my third market? Can I?
First of all, I don't understand this first market, second market, third market. I don't understand what is that.
Okay,
Like,
so in your example, you said you were trading on different markets, right? Like you
yes,
choose what you said Euro, New Zealand dollar. That was one pair, right? That you traded.
yeah, yeah,
Then you chose a second market to trade, like the other one to choose. You said USD, Canadian dollar, right?
yeah.
So you see, like, choose one market that's going to be your main market, because then you will know it very well when you analyze it. You will know what's happening. You can sort of become an expert in this market. This will be like your thing that you can do this. It can be Euro, New Zealand dollar, for example, once you realize that you like this market. Or it can be USD to Canadian dollar, if that's something you like more. Then if you want to add another market to trade, like open positions, then you could go, for example, for Euro, New Zealand dollar, because the pairs you gave, which will actually, we can write it down as an example. The pairs you gave, your first one was Euro, New Zealand dollar. The second was USD CAD, right? So like this is very good setup because none of the currencies are the same. So like Euro is different, New Zealand dollar is different, US dollar is different. Oh, okay. US dollar is different. I wonder what is happening. Wait, let's open it again. US dollar is different and Canadian dollar is different. So this is good. So like that's why I'm saying choose one as your main. Like once you realize which one you like more, because you're just starting out, you can, you know, just like explore for now because you have your demo account and you can just, that's the point, to try different markets and see which one you will like more, and then decide on one that is your main market. That's the one you open most of your position on this specific market you chose, and then add another one as sort of like, if nothing is happening on your main one, let's say USD to Canadian dollar, then you start trading on Euro to New Zealand dollar, for example, right? So that's the point. Do you understand?
Yes, I understand now.
Yeah. So like, for example, here, you have number one, which is GBP USD. Then let's say you have Euro JPY. And then the third one I said, if you want to add a third one, for example, DAX. So DAX, like we said, it's company, there's now D40, so it's 40 companies in Germany. So this will be obviously in euros, as we said. So I shouldn't add this as my third market because it's in euro, right? And this one is also in euro. But if I, for example, stop trading this market, so like I don't trade on this, I have no positions open, we can always switch it around, right? Like just have GBP USD and have DAX as your second market, right? You can do that. That's absolutely fine. Just don't have few positions open on Euro JPY and also on DAX, because then you have basically two markets in euro and you're doing like, it's just, you will see that once you do that for a while, that it can set you up for quite a trap. So that's why we're saying do not to do it. Now, when you have from 2 to 3 markets, it's advisable, it's recommended to have, it's good to have from $1,000 to $2,000 on your account, because if you open a few positions here, a few positions there, then you might realize that very quickly, like whatever you have might not be enough, even with the smallest volume. So I would advise to have this amount of money if you want to trade 2 and more markets, because it's just safer and it will protect your capital. Okay, so this is like the first thing that we can talk about. So right now, very often, I will explain now also why it's not good to do multiple markets at later stages. So very often, this is like quite a simple rule, but people forget about this because once you get it right a few times, you have this the god of market syndrome, that you think, you know, you're just the best and you cannot go wrong and it's going up. It's sort of, it becomes like gambling. So you think you're the best and you know, you do nothing wrong. But now let's put an example. Let's say you opened a lot of positions on different markets. So let's say you opened 10 positions on 10 different markets, right? At the same time. I'm going to put it down. 10 positions on 10 different markets. Statistically speaking, is it possible that you will be hit by stop loss on every market? Because you opened only one position on one market, but you did 10 times, 10 different markets. USD CAD, Euro USD, GBP USD, you like went with everything, right? Is there a chance you will be hit by a stop loss in this example, right? On like different markets. To just open the positions, it's your first trade on this market. Is it possible?
Yes.
Yeah, it's quite possible. It's quite possible because it's your first position, you just did your analysis, and it's very likely that you will be hit by a stop loss, right? So not only you'll be hit by a stop loss possibly 10 times, but also you are, I want to use nice words, but I'm just going to be blunt here. You're fucking up your statistic trial that you did in the basic course. Remember, in the basic course, Damien did this exercise with the coin toss. So he was tossing the coin 20 times and you could see if it was heads or tails. And in this way, you could see the statistic trial, right? So in this situation, you already used 10 out of 20 tries, and you just opened one here, one here, one here, and you did that. Now, imagine a situation in which you open 10 positions, one by one, on one market. Which is more likely to be hit by a stop loss? You think you will be hit 10 times on the stop loss on the same market? Or it might be easier to be hit by a stop loss 10 times on 10 different markets where you have no fucking clue what's happening?
I think this is quite the same because 10 position in on one market, you're gonna hit stop loss many times, I think.
It might seem the same, but trust me, it's not, because every time, like, that's what people make this mistake. You get hit by a stop loss 3 times on GBP USD, you're like, oh, fuck it, it's just not for me. I'm changing the market, I'm going somewhere else. Wrong. Wrong, because every time you were wrong on the one market, you were more likely to get it right. Because you're starting to understand what is happening on the same market, so we know what is going on. And remember, with our 3-to-1 ratio, even if you get 3 positions hit by a stop loss, and that one, the next one, will be profitable because we have 3-to-1 ratio, then you will be basically on 0, right? So you will save your deposit by this. And people, that's why we're saying choose one market, because obviously, sure, you can be hit by stop loss 10 times on the same market. It's market. We don't know what's going to happen. But statistically speaking, it's less likely that to happen. Like, more likely you'll get hit, stop loss on 10 different markets, just because your analysis and what's happening on the market is just too much for you, okay? Because you're playing on 10 different sort of things, or at least on 4 or 5 different groups of what we did in the previous exercise with the brackets. So that's why we're saying stick to one market at first. Choose it, and then you will know. Like I said it, I think, last week or 2 weeks ago. It will take time, because it's like we said, it's like with dating, right? You will need time to see. That's why you have demo account, or you play on very small volume, to see if that market is something you actually like and something that it's good for you. Some dates will be amazing with no effort. Some dates will be pain in the ass, will be a struggle, right? And it's the same with the markets. Test them all out, see which one you like, which one you don't, and then stick to it, because trust me, you will be way more ahead and you'll be way more profitable if you just stick to one market at first, or at least two. That's what I did at first. I tried opening on like whatever was available. I just did that. And I just couldn't control what is happening. It was too much because there was too many positions opened. Luckily, it was a demo account, so like I didn't lose anything. But then when I started trading like for real, I was like, okay, this cannot happen again. And I chose GBP USD, and right now I'm very aware of what's happening on GBP USD. I know it pretty well, and I can actually look at it and see, okay, I don't need to worry and look at the chart like every few minutes. I can do it whenever my intervals, like every 4 hours, for example, if I'm on H4, right? And this gives you, first of all, it gives you freedom, it gives you some peace, and it gives you this confidence that you know what is happening because you're not overwhelmed with like different markets. So this here is all for you to help you, right? Once you realize what you like, just choose it and then stick to it. And then you can add more once you feel more confident. But don't do this rookie mistake that you like, let's try everything, like for a casino or something. Play it out, test it out on demo account with different sort of markets, and then choose one. Okay, so this is one. Okay, so I had to look to make sure that we have everything covered. We can open a new file because now we have to save changes. No. Now we will talk about how to choose that main market, right? So how to choose the main market. So what how to choose? What is happening with this app? It's so weird. How to choose the main market. Okay, so playing on your main market should be relatively easy and relatively enjoyable, right? It shouldn't be a struggle or like mental sort of draining of your energy. So the market needs to be big, right? Why? Because there is more life, more movements, and also this means big means also that it's liquid, and that also means that there is lower spreads, right? So I'm not telling you which one to choose. This is so weird today. I'm not telling you which one to choose. This is completely up to you. However, if I were you, I would choose something from either, like we said in the brackets, either something from USD, something from JPY, maybe something with Canadian dollar, USD CAD, for example, because this is quite a big one as well. I wouldn't choose anything exotic just because it's not as profitable. So like, let's go back to our brackets. So like PLN, which is Polish zloty, or like Swiss franc. How many countries are using Polish zlotys? Unfortunately, best to my knowledge, only one, right? So it's not a big market. Basically, that's one. Meaning that the spreads will be way higher. I don't even know what the spread is. I don't look at this market, but trust me, it's definitely bigger than the spreads are bigger than like GBP USD, for example. So whatever profit you had, it will be gone by this. So this will be like cost of running your business. So it's just not as profitable to play on like exotic pairs like this or like Swiss franc, because again, this is not very big market. So I would avoid those tiny pairs and choose something within USD, JPY, CAD, for example. Even New Zealand dollar is not bad. When it comes to, we've talked about this, but I want to make this as clear as possible because we're talking about this and probably we're not going to come back to this at some point. Probably we will, but not for a few weeks. Don't trade indices if you don't have $5,000 on your account. So I'm going to even write it down. Don't trade unless 5K USD. Why? Because the candles are huge. And if you don't have enough deposit, one candle can burn your deposit, right? Because sometimes we saw like one candle can have up to 400 pips. So don't do it. This is for your safety. It's pretty fast. So if you don't sort of control it, it can just ruin you. So I wouldn't think it's bad. It's a good idea to do it at first. Commodities, again, those are not as fast as indices, still pretty fast. So here, don't trade unless 1K USD. Again, at the end of the day, you can do whatever you want, but this is the same reason. We don't want you to like lose your deposit because it's quite a fast market. It's not as big with the candles, but at first, the good choice would be Forex pairs. Any Forex pair, that is quite a big one. Crypto is one of those that we said that the analysis in the last week, I think we said that the analysis for crypto works as well. You can do your full-time analysis for like advanced course or even with the basic with the candles and everything. However, this is Twitter market, meaning like, well, X market now, right? Meaning that it's very easily influenced by outside sources, let's say. So yeah, source will be the best. So for example, like Elon Musk posting something about like Dogecoin, whatever, and the analysis just goes to the bin, basically, right? Because the price just starts pumping and you thought it's gonna be sell because it's an external factor that influenced the price that shouldn't really be there. And sometimes like it's very easy because crypto is relatively not as big and it's very easily influenced by people or famous people that are just buying into the trend. So I would like have it with a exclamation mark, just so you are aware that perhaps this is not good for trading as of yet. I mean, this is totally up to you to choose from, but this is the risk that I'm presenting for you. If someone does it like long term or like just investing, yeah, that's fine. But like for trading, you need to be aware that it is good sides and bad sides. Obviously, when it goes down, if you have stop loss, not much happened. The good side is right that if it's usually the pumps when they happen, if you have a buy position, it can easily like 5x your account, which is more difficult on Forex, right? So, like I said, the good sides and bad sides, and good sides are obviously very good. But if you don't play with stop loss, you play with hedge. This can be quite a tricky market because obviously the price goes up and down. You can activate your sell stop, but this is the advanced knowledge, so we'll cut it at that. Yeah, so this is what it comes to choosing the main market. Let's see if I had anything else to tell you. No, this is pretty much it when it comes to choosing the markets. So to like sum up this whole topic, choose the main market based on how big it is, how liquid it is, and the spreads, right? Anything from the pairs USD, JPY, or even like Canadian dollar is more than fine. I would advise Forex at first. Then when your account is bigger, or at least if you started with bigger account, go for it. Go for like gold or whatever, or Dow Jones. But if you have less than $1,000, stick to this because this is good for like practicing. The movements are relatively slow and the candles are not very big, so this is perfect playground to like learn. And don't mix the markets with the same currency pairs. So like don't mix Euro USD and GBP USD because as we saw on TradingView, they are the same, right? So you're making the same mistake twice. We always consider the worst case scenario because we need to be prepared for the worst, right? We can expect the best, but need to get ready for the worst one. So like that's why we're avoiding all those things that can set us up for potential failure, basically, or like burning our account. Does that make sense? Does anyone have any questions? Is there anything about the markets that you want to talk about, or that's the time to ask? I guess that means no. I wonder why I cannot.
It means yes, but hey, you said something about hedging the positions.
Yeah.
But that's the thing we're going to learn in the advanced class,
Yes.
probably.
Yeah. Hedging is a strategy that doesn't involve stop loss, but then obviously you need to be aware of the market and more like global trend with the corrections, how to measure them. So this is a knowledge that we teach on the advanced mentoring that Przemek is in. And yeah, that's the hedge, and that doesn't involve stop loss. Involves sell stop or buy stop, which means that normally in the stop loss scenario you would be just stopped and that would be it, right? You're out of the market. With sell stop, you entering a sell position. So basically, when you make a mistake, you're still making money, but it says like different scenarios, and it's very simplified for the sake of our conversation now. But yeah, hedge is something that we teach on the advanced course. Okay. Anything else about the market, or we can move on to sort of, I guess, the last bit of today, because we have like around 15 minutes. You can't see the chat window for some. Oh, now I can see it. Okay, there's nothing on the chat, so that's fine. Okay, guys. So let's go back. Let's see. Okay. Let's go back to the because Mario's just starting out. He had his first 3 videos he watched today because he just joined us recently. I want to well, basically for you will be a reminder. For him it will be like no, don't save changes. For him it will be like an opening for what to do. He'll have. Will he have that in the course? No, he will not. So this is a good place to start. Grzegorz, you probably know it by heart now. So for you, just a reminder. For him, it will be a good good thing to start. I want to go through this slowly so we can have some understanding at the end. And it's always good to refresh it. I know Grzegorz knows it. Robert probably knows it as well. Tierno, I'm not sure when you joined, if we had it or not. So basically, we need to have a formula to open a position, basically enter the market. We need to know what are the requirements to enter the market. We need to make sure that we're safe, that we're secured, and then we can open our position. So there are basically 8 steps that we have to open a position. In the, let's say, basic knowledge, the second day with money knowledge. Okay, so if we start, let's do it like this, that should be enough. If we start from number 1, what do we need in order to open a position?
Is it an open question to everyone, or?
It is an open question, basically. Yeah, that is open. I know, Grzegorz, that you know, but yeah, if you want to say, you can say it. That's great. If anyone else, I know that Marius doesn't know. Robert probably knows. If Tierno, do you know what are the requirements? What is the first requirement to open a position?
First requirement, I think, is to see a candle formation that indicates the rise of the market,
Yeah.
or
Yeah, well, candle formation is definitely one of them. We can put it. I wouldn't say there's a specific order. I have it in a specific order, but we can put candle formation for the sake of it. I'll even put it candle formation. So basically, for Mario's as well, you need. Oh, maybe that's why it comes up. It's always when this happens. All right, this okay. So you need a candle formation to enter the market, always. Whether it's advanced knowledge, whether it's basic knowledge, you always need a candle formation to start trading. There are 8 that we use. Obviously, there's way more, but those are the ones that were chosen by us that are most frequent and sort of most needed to open a position. So candle formation is definitely one of them. The other one I can do if no one wants will be RSI, right? The RSI is, if I go back to my screen, the RSI is right here. This is RSI. And RSI is a very helpful indicator, one of the steps, which means that if the RSI above 75, for us, that equals sell, and RSI below 25, that equals buy, right? So, so like when you look at this, for example, like let's go to that GBP USD, NBH4. Like here, the RSI is below 25 because we set the levels for 75 and 25. And here you have those indicators. That's where you see that you could potentially, this one of the requirements is met, which is the RSI above 75, here above 75, here below 25. So those are the spots you can easily see, like when this happens, when this, for example, goes up here, one of the requirements is there. So another one, as we have on the list, is candle formation. The third one, anyone?
Stop loss?
Which one?
Or stop loss?
I can't hear you.
Actually, the third one is to do stop loss.
Stop loss, yes, stop loss is there. We'll get there in a second. The one I want to do before we move to like those ones, but you're right, is also candle size. Candle size is an candle size is an indicator in our version of the course where we created a indicator that shows you basically the size of the candle in comparison to the previous 20 candles. So the requirement is that, let's say we zoom in. So the requirement is, for example, here, obviously, I'm not going to ask Mario's, but everyone else should know what candle formation is this.
It's kind of bullish engulfing.
Yeah, that is a bullish engulfing, exactly. So like when you have bullish engulfing and the last candle, which is white in this situation, let's just make sure that Marius can see as well. What is it? So this is bullish engulfing. We'll get there. We'll go through those. Don't worry. This will be in the course as well. So here, you look at the last candle, which is the white one, and you compare if this body of the candle is bigger than at least 11 out of the last 20 candles. I don't have that indicator on my MacBook. It's on Windows. But basically here, below every candle, you would see either green or red line. If it's green, it means it is bigger than the previous at least 11 out of 20. If it's red, it's not. Without this indicator, you would have to measure every single one of them, which would take you some time, basically. So that's why you have the indicator. So you all should have it. I have it as well, but on my Windows. So this is one of the requirements to open a position. Okay, number 4 is other than stop loss, because you said stop loss, so that's correct. It's also take profit. We'll get there later. But there's another thing called risk, right? You need to know your risk, whether it's profitable and how you're going to do it. So first of all, you need to know your risk in pips. So pips or points, depending how you want to call it, obviously. The risk is basically whatever you would open your position. So after a candle formation would be here, right? Candle formation formed. We go here, and here is where you open. So the risk is from here to the lowest point and one pip for stop loss. So from buy to basically stop loss. So like in pips, that's 26, 26, even 27, because everything above 5 would be like 27 pips. So we would know in this case, the risk in pips would be 20. That's why. Okay, that makes sense. Okay, so the risk in pips also, like we know, the risk in volume. So how much of your capital or like your deposit you want to use in a single transaction, and how to adjust volume to enter the market without too much risk. There is a simple formula we did already. It's very easy. You have the bot, as far as I'm aware, so you don't have to count it. You just put it in the bot that you want to risk. We said that the maximum risk is from 1 to 5% in a single transaction of the whole deposit we have, right? So let's say you want to risk 5%. We always do this example here that is very useful, which is, very simply speaking, just for the sake of time and because most of you know this, Marius will definitely get there and you can always rewatch it. So let's say your deposit, right, on your trading account, deposit is $1,000, right? This is your deposit. Now, you know that your risk in pips is, let's say, 20. Yeah, 20 is okay. Like 20 pips, right? Now, you want to risk 5% of your deposit, which means that 5% out of 1,000, it's $50, right? Because $10, 10% is $100, so 5 is $50. Okay, so now what you do, you basically divide 50 US dollars by 20 pips, and you will get what, 2.5, right? 2.5. And now the magic happens. You move this comma one place to your left, which means that the volume would be 0.25 because we moved this to the left, and the volume for this transaction would be 0.25 lot. You don't have to count this every single time because you have the bot, like we said. You just put, you want to risk 5%, the bot does everything for you, which means that it will give you, I have to start another one. It will give you where to put your stop loss, which is basically security for you so we don't lose your money, right? And where to put your take profit, which will tell you when, or like where is the point to take profit, basically, right? And we know that in our formula, in our strategy, we have 3-to-1 ratio, right? So the take profit is 3 times higher than the stop loss. And the last point is you either buy or you either sell, because you will know by all the previous steps mentioned. So
remove this,
yeah.
1 second. We remove these things in front of certain fonts. Remove it so that I take a picture because I didn't see that. Thank you.
Yeah, you see it now?
It's okay. It's okay.
Perfect. So this is the main formula, right? We've done it a few times, but it's always good to remember and remind it when new people come. So this is pretty much it. We will, this is the main formula. Now we will, in the course, and we can always do it like next week as well, we will go through the construction of a candle and buy formula and sell formula. Like I said, this all, like this specifically, is done by a robot. But I always counted myself just to make sure, because it's a good exercise to it just gives you confidence that you understand what you're actually doing. So it's good to sometimes counter yourself and make sure that robot doesn't make any mistakes or you don't make any mistakes. So next week, we will do buy and sell formula, and we'll analyze the market as well, and see maybe there's some live trading possibilities on like M15. Maybe something will happen because obviously we can do it as well. And preferably, I think that there will be something more as well that will add to next week's live. So yeah, this is quite quick. An hour just goes really quickly. Maybe there will be more at some point. I don't know. It seems that we might meet more than just one time a week, but I can't say anything for now. I don't know. But yeah, so this is for today that we pretty much did. I want to know from Marios, does this make sense? Like, I know you just started, so it might be like some sort of different language, but do you more or less see what is happening?
Yeah. To be honest, I understand.
Yeah. Okay.
Yeah, some stuff. Yeah, I understand it. I understand
Okay.
about the main formula. It is very helpful.
Okay.
Okay. Thank you so much.
I'm really happy. Okay. Any questions you have or anyone else?
At the moment, no.
Questions. I have questions. Some questions in my book.
Yeah.
Book. So this 3-in-1 ratio you have in the rule, 3-in-1 ratio, right? Is this one applicable to all the time frame, like 5 minutes, 15 minutes, something like that?
Yeah.
So
Yeah,
I can
it's always the same.
So it is applicable to all those time frames.
Always 3-to-1. Always 3-to-1. And next week when we meet, we will go through buy and sell formula, and you will see when we start drawing it that it's always the same. That you have where is the stop loss, because the size and because basically take profit is 3 times the risk, and the risk is always like in the buy example. Let's say the risk is from buy where you started, right, to stop loss. Basically, that's your risk, and take profit is 3 times that risk. So yes, so it's always 3-to-1. It doesn't matter what interval, what market, it's always 3-to-1.
The risk is from the buy position to.
Say it again.
If you can repeat again what you explained right now.
Yeah. Okay, I got it. We'll do it next week as well, so don't worry. It's not like it's gonna be gone, but I'll just basically show you. Okay. So this is a buy. Sorry. The candle that is obviously going up is the white candle, right? So so here, then the new one opens next to it, right here, because it went up. It went from here through here. Then it's another one is opening. Now this is your buy, right? That's where you opened your position on buy. And where is your stop loss? Well, stop loss would be low price, so the lowest point, -1 for the security. So like your stop loss would be basically here in this place. To put it in a example, it would be stop loss means stop loss is low price -1. And this is it. We'll go through it again slowly next week. But basically, that space, this is stop loss. From here to here, this is your risk. So when you set your take profit, you go from here, right? Like basically take profit means 3 times risk. So this size, well, let's say it's 50 pips, right? This risk is 50 pips. Then take profit would be starting from here, from this place, would be 150 pips, right? So it's 3 times the risk. So obviously it will be way higher, but I don't have the page for it.
It's okay. I understand very well.
You get it, right?
Yeah.
Okay. So like I said, we'll do it slowly next time, and we'll do something else as well. But it's good always to like come back to it once in a while, and we'll do some live trading session, and perhaps maybe add a new topic as well. We'll see what's gonna happen. But that's pretty much it for today, guys. Are there any more questions, or are we good?
So, I just wanted to ask last question. Why, for instance, there's a difference between the spread of GPY and the others. Like the others are true, the GPY is free.
What markets? JPY and.
Could I check which market? I see it in the course and.
Basically, the spreads will always the spreads will always be different because it doesn't matter if it's different markets. Sometimes even different time of the day will give you like crazy spreads, like crazy high spreads on like gold and different. It depends on the time of the day, time of what's happening, and also different markets. The bigger the market, the better liquidity, the lower the spreads. However, sometimes the spreads can go higher even on like bigger markets. So you can't put a sort of dot saying that on GBP JPY the spread is always 1 pip or 2 pips. It's gonna move, it's gonna transfer. So like you can't predict the spread basically. It just means
how can I know the spread is 1 or 2 something like that?
That is on the robot you guys have. So when you install that robot you have this will give you the basically the information about the spread.
They have robot. I couldn't install it in this one, my account trading. I don't know why, but I couldn't.
Okay, so we can do that. We can do that after the sort of the class stops, so to speak, and we can have a look what is happening. But other than this, is there anything else?
No, for now it's okay. Thank you so much.
Okay, cool. Grzegorz and Robert, I guess I can't see anything on the chat, but no, I guess there is nothing on the chat. So guys, that's pretty much it for today. I hope to see you guys next week. We'll do, like I said, something slightly different. And yeah, thank you for today, and see you next week. Whoever wants to stay, obviously can stay. I'll just ask Tierno what's up with the robot, and but this is more technical. And yeah, so see you guys next week.
Thank you so much.
I can stop the recording as well, actually. So let's stop the